We have three major deals happening this month in IT services. They're expanding, divesting, and entering new territories in the world of consumer technology and IT. First up, we have Atos acquiring or actually bidding $10 billion for DXC Technologies. Atos is a powerhouse in the IT services industry, and if they want something, they'll get it. They pay a premium for big deals. IT services deals, as mentioned before, have seen over 30 close this year already in 2020. There are going to be a lot more. Atos is a $7 billion business. It's based in France. Right now, they're looking for approval, shareholder approval, and investor support to acquire DXC. This is a major IT service deal. The top competitors for Atos are Accenture, Infosys, IBM. A lot of these cloud migration, hybrid cloud strategy companies. Atos is saying that they need to be competitive, and in order to do that, they need to scale. They need to cut administrative costs, and they could do this with their cost synergies by acquiring DXC. They need to do this. They did this in 2018 with Syntel. They made a $3.4 billion offer in cash, bought out Syntel, which was and is a major IT service provider. That deal really paid off for Atos last year when cloud strategies really picked up during the pandemic, and we saw a lot of people pivot to this. We saw this with IBM now pivoting, shedding off their IT service provider business to move more into hybrid cloud. So there's a spin. There's a lot of opportunities here. We'll see what DXC says. I think the shareholders will require or want of more than $10 billion. The acquisition will double the size. It'll make them a $17+ billion business for Atos shareholders. So it'll be pretty exciting. I think it'll definitely change the strategy on a global scale. Next up, we have Office Depot rejecting Staples acquisition. These are clear brand name, consumer brand names in the office supply industry. They're very reputable. In 2016, a judge actually blocked Staples' original deal of $6.3 billion to acquire Office Depot because of the anti-competitive antitrust laws. Now, Staples is offering $2.1 billion and a chance to spin off CompuCom, its IT services division. Office Depot actually acquired CompuCom in 2017 for $1 billion at a 10x multiple. And if you read my article, they actually have the deal presentation they offered to raise, I think, $750 million in debt or as a loan syndication. That was a year after the Staples bid fell through, and Office Depot is looking to expand their strategy beyond office supplies to enter a more competitive space where they can get reoccurring margins, which is very strong in IT services, and steady profits, which is very strong in IT services. Staples doesn't want that. They're backed by private equity Sycamore Partners, and they're looking to divest the IT services unit. Office Depot has proposed that they would like to do some type of joint venture or maybe merge the retail division so that they can maintain market leadership. But you can see from the declining bid, which is now a third of what it was 4 years ago, this industry is not in a good position. And there'll be a lot more upstarts that come out and compete and win against these two incumbents in the industry right now. And last is Google just closed its Fitbit acquisition. This is a big move into the consumer tech industry. This took about 2 years and dozens of regulatory hurdles, specifically concessions in the European Unions, to get over this. There was a really big concern between data and devices. Google made this clear that this is a big device move. I believe this. This is the same type of deal they did when they acquired Android. It's really hard to get into the hardware space. This is a critical move for them. This is not easy. Obviously, it took a long time. It doesn't matter how much money you have. So now they've entered the space. They're going to have access to all these devices that people love to buy. I think there are tens of thousands of customers in this space for Fitbit. There's a lot of opportunity here. They just picked up hired away a new executive who's in the CPG space. She, I believe her name is Juicy Buonventino. She worked 18 years at J&J, Amway, Kimberly-Clark. She's a really powerful executive. She's joining their cloud platform. bringing that CPG expertise, increasing their vertical presence in this space. I think they will do a lot. I think the real big curveball for them will be the YouTube growth spurt. So YouTube obviously has increased viewership, traffic, engagement, click-through rates all across the board. But what it's missing today is the interactive shopping experience. We haven't seen this in e-commerce. None of the current social media platforms offer this at the moment. Nobody's been able to do it well. Even Instagram doesn't have a very good interface for this. Nobody has that interaction or promotes their users enough in the same way as YouTube does. And it's much more engaging. Their comments are open-ended. You can access it on all the platforms in a very easy format. So I think entering the CPG space will give them the edge to lead the shopping experience, to create the QVC home shopping network on YouTube, to build it with brand influencers and build it with highly engaged users. So I think it's a pretty big turnaround. I think it's the edge that Facebook, Amazon, and other big contenders in the space simply don't have, and YouTube's platform is much bigger and better than all the other media assets in the world today. So let's see what Google does with this. I think it has a lot of potential that's just not being accounted for today.